Here's the first take that we're getting on the index. It is well in the green, 80 points higher now on the Nifty.
Markets continue to remain wedged in a very, very tight band.
Nifty actually has surged from the lows of the day. It is at the high point right now, 82 points higher on the Nifty right now.
The sensex too is surging in trades, and the banks. Look at the banks. The Nifty Bank is up close to about 500 points.
17,750 on the Nifty, and a large part of that is banking. We've been saying that for a while now. 550-point move on the Nifty Bank.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action in just 5 headlines. I'm Ekta Batra. Here are the top stories for this evening. The Nifty and the Sensex gain over 0.5%. Financials lead the market higher. The Nifty Bank Index surges close to 1.5%. BSE companies gain a market cap of around 1.4 lakh crore. Reliance gains 0.25% after beating street estimates on all fronts. Fourth quarter net profits jumped 22% sequentially to 19,300 crores. This is the company's highest quarterly net profit on record. Annual EBITDA sales scales to 1.5 lakh crores for the first time. Reserve Bank of India allows HDFC Bank more time to meet priority sector norms and allows HDFC Group to take up stakes in its insurance arm, but doesn't offer any concession or CRR or SLR. The news fires up HDFC Life. HDFC Twins close nearly 1% higher. ICICI Bank delivers a stellar fourth quarter, posts its highest quarterly net interest margins, also reports record profitly income growth, returns on assets and return on equity. Stock surges over 2%. Sun Pharma tumbles after receiving non-compliance notice for its Mohali facility from the US FDA. Wipro gains over 2% on a buyback possibility along with its results, while Ami Organics perks up as it forays into the semiconductor industry. All right, those are the top stories. Here's a lineup of what we have in store for you. In Market Opinion, we have Vineet Sambre of DSP Investment Managers. Other big voices on the show today are Sandeep Bakshi of ICICI Bank and Prashant Kumar of Yes Bank. Well, straight to the trading action then. The Lal Street starts the week on a firm footing. Nifty and the Sensex gain over 0.5%. Financials led the market higher, with ICICI Bank being the top contributor. BSE companies gained a market cap of 1.4 lakh crores, the highest level in 2 months. Surabhi Upadhyay is here with a wrap on the day's trading action.
Well, the week finally starts with a bang. We got so used to consolidation and the index not moving even an inch. All of that ended, at least for today, and we saw momentum come back to the market, which actually led to the Nifty heading to the 17,750 levels. Not bad at all. What powered the move? Earnings and in specific banks. The ICICI Bank numbers literally lit up the charts, and they've led to a lot of enthusiasm and excitement in the rest of the pack as well. So the rub-off effect was seen on an Axis Bank, on a State Bank of India. The Bank Nifty was very, very powerful today with a move well over 1%. So banks definitely taking the market higher. The other trend was the HDFC Bank merger, kind of adding to the sentiment. Both of those stocks, as the RBI came in with some more clarifications in terms of regulatory requirements as the merger gets underway, both of them were up around 0.5% to 1%. HDFC Life was the biggest beneficiary because of the clarification from the RBI that the parents, HDFC Bank, HDFC, they don't have to now sell down their stake to 30% in the life insurance subsidiary. So that stock, HDFC Life, star performer, top gainer on the Nifty. Which then brings me to some of the consumer stocks. Earnings are really driving all the action over here. Ahead of numbers, Tata Consumer was up, for instance, 4.5%. Pulled up some other names like Nestle and Titan along with it. So consumers were good. Reliance was fairly steady, 0.5% up after its strong fourth quarter show as well. So what was the problem? Well, there was some selling in pharma for sure, and in IndusInd Bank. Now, that was one banking number that didn't quite meet expectations, especially with ICICI Bank really setting the bar so high. Some selling there, and of course, pharma, as I mentioned, which was a little downbeat. The mid-cap market was in fine form as well, with a strong advance decline ratio, 0.5% up on the mid-cap indices, little more than that on the small-cap index. Short point, momentum is back, the bulls are alive and kicking, and as long as this market keeps getting good, solid earnings, the bulls will want to take control back.
Okay, all right, Surabhi, thanks very much for that. In Market Opinion, Vineet Sambre of DSP Investment Managers said that the market might see some recovery post the slowdown over the next 1 or 2 quarters. and added that consumption slowdown in rural India is going to impact urban markets now.
I think clearly, we are seeing some bit of moderation when we talk about the earnings. I think over the next 1 or 2 quarters, the impact of this slowdown should be felt, and we should see the recovery post that. Within the consumption basket, we are seeing that the entry level or the rural side or the bottom of the pyramid. I think that's the category which is sort of slowed a bit, and it is also maybe casting some bit of impact on the urban markets now. So I think there is some bit of that slowdown which is there. Maybe people are sort of wanting to save slightly more given where the inflation is right now. I mean, it is cooling off, but I think people just want to be on the side of a bit more caution. It will be a good positive if, let's say pre-election led spend starts to improve the overall consumption. The investments which have taken place till now, those start showing up in terms of improvement in consumption. I think that will be a double sort of a positive for the markets.
Okay, so that's some opinion there. But on to the second headline now. Reliance was buzzing in trade after delivering a strong set of numbers, beating the street on all parameters. Net profits jumped over 22% on a quarterly basis to 19,300 crores. This, the company reported, was the highest quarterly net profit on record. Sonia Shenoy joins in with more.
Well, thanks a lot for that. Reliance Industries reported their numbers which were above street estimates, and the star of the show this time around was the oil to chemicals business, which saw a good growth in its operational performance. The other star was the retail business, which has grown at a scorching pace. Now Reliance Retail having stores in excess of 18,000, which is a growth of 20% compared to what we saw last year. Brokerages have given the earnings a 2 thumbs up. In fact, Morgan Stanley says that the numbers beat street estimates, and it's the energy vertical that drove the beat in the numbers this time around. Kotak Institutional Equities reiterated a buy with a revised target price of 2,800 rupees. They say that the strong pace of store addition in the retail segment is what has boosted the earnings this time around. They added 800 new stores in Q4 with a total addition of 3,000 stores in FY23, and this takes the total stores to 18,000, which is a growth of 20% compared to last year. Jefferies has upgraded the EBITDA of FY24 and 25 by 3%. They say that the retail's scorching pace of growth is something that could aid the EBITDA by 30% compounded over the next 2 years. Motilal Oswal reiterates a buy with a target price of 2,800. The other positive they mention is that the net debt remains flat despite the capex underway, which means that the capex was funded through internal accruals and no further pressure on the balance sheet, which is a positive. And finally, JP Morgan remains overweight. They have a target price of 2,960. They say the risk reward is now favorable for investors. The stock's underperformance in the last 1 year is unwarranted, they say. Remember, in the last 1 year, the Reliance stock is down 15%, while the Nifty is up 3%, and now they feel things could reverse.
Okay, all right, Sonia, thanks very much for that. Well, on to the third headline today. HDFC and HDFC Bank rallied in trade after RBI allowed HDFC Bank more time to meet priority sector norms. HDFC Life also surged over 8% as the Reserve Bank of India also allowed HDFC Group to up stakes in its insurance arms, but doesn't offer any concession on CRR or SLR. Abhishek Kothari is here with more.
As you mentioned, RBI has provided certain clarification for requests made by HDFC Bank and HDFC Limited with respect to merger of both the entities. So first up, for priority sector lending target, 1/3 of HDFC's outstanding loans will be taken care of priority sector lending target for first year. The balance 2/3 will be done over the next 2 years. So this is a big relief in terms of meeting the priority sector lending norms. Investments including arms and associates of HDFC Limited can continue as investments for HDFC Bank. So with respect to stake in HDFC Life and HDFC Ergo, the bank can take up stake over 50% in both the entities. For HDFC Credila, they have to take the stake to 10%, down to 10% within 2 years. Other highlights are that they have to comply with CRR, that is cash reserve ratio requirement, SLR, statutory liquidity ratio requirement, and LCR, that is liquidity coverage ratio without any exception acquisition. So from day one, they will have to meet the CRR, SLR and the LCR requirement of the merged entity. So HDFC's rates to be linked to benchmark within 6 months. This is a positive news given the fact that this will help in the yields remaining on the healthier side. HDFC Bank has arranged a con call in which they say the requirement for PSL kicks in only 12 months after effective date. So they have some time in terms of meeting the requisites, carrying excess LCR already in the balance sheet, and they are also carrying excess SLR as well as the CRR above the requisite norms. So brokerages have written note. CLSA says that a glide path of 2 to 3 years provides adequate time for HDFC Bank to reduce its priority sector lending norms versus negative PSL impact that would have happened on day one of the merger. Bernstein has also written, they say that the development increases the confidence of a smooth merger process for HDFC Bank and HDFC Limited. The pros and cons of RBI announcement: priority sector lending requisite meeting time is sufficient for the lenders to meet that norm. However, meeting CRR SLR requirement from day one can have slight impact on the immediate earning profile of the merged entity. However, it will get played out over the next couple of quarters. So things which are still pending with RBI in terms of the application and permission sought by HDFC Bank and HDFC Limited is clarity on valuation of certain assets that are held by HDFC Limited. Now, project financing loans that HDFC Limited has provided, there is more clarification needed with respect to certain procedural matters over there, and small investments in the book of HDFC Limited, how that will get accounted in the bank. So these are some of the key clarifications that HDFC Group is awaiting. Back to you.
Okay, all right, Abhishek, thanks very much for that. So what does that mean for HDFC Life, and what are brokerages saying? Also, what is this nod by the RBI likely to imply for ICICI Lombard? Surbhi is here with the details.
Thanks so much for that. So RBI's decision to allow the merged entity HDFC and HDFC Bank to own over 50% stake in HDFC Life comes as a double booster. Now with this, HDFC Life will become a direct subsidiary of HDFC Bank. Now currently it has around 50% stake in HDFC Bank channel, which is likely to only improve from here on. Also, this will help to decrease their cost of distribution, which will in turn aid their margins. Now, the overhang of a possible reduction of a 19% stake sale by HDFC to HDFC Bank, if the RBI had directed to keep the stake below 30%, now goes away. Rather, it is now certain that the merged entity will acquire additional stake before merger completion. Now, currently, Aberdeen holds around 1.7% stake and Exide holds around 4% stake. So, on back of this positive news, certain brokerages have also upgraded HDFC Life. MK has upgraded from hold to a buy with a target price of 650, and Investec says that the stake sale overhang now goes away from HDFC Life. They prefer HDFC Life over the other insurance players. They have a buy rating with a target price of 560. On this continuation, Morgan Stanley also has an interesting view, but they have the view on ICICI Lombard. They say now the RBI's permission to increase the stake over 50% in Life may have a positive rub-off on ICICI Lombard as well. They say that ICICI Bank had to bring down the stake in Lombard to 30% by September 2024. They currently own around 48%. Now with this, it means that ICICI Bank can increase their stake in Lombard as well. On its Q4 earnings call, ICICI Bank did not specify in which way would they go. Will they increase or decrease their stake is not yet known. They say if they choose to increase the stake in Lombard, it will remove a big overhang from Lombard. They expect it to remain a talking point for market until ICICI Bank states which course of action will they take.
Okay, all right, Surbhi, thanks very much for that. Time for a break now, but we'll be back on the other side with all of the other top stories.